Okay, we'll get started. So good afternoon, everyone, and welcome to the afternoon session of our technology conference. I will be the moderator for what should be an interesting and exciting telehealth panel. It's one that we did last year, and we're certainly more than pleased to do it again this year. So I'll be the moderator. My name is Nick Agostino. I'm the Diversified Technology Analyst here at Laurentian Bank Securities. And joining me on this panel, first and foremost, is the new interim CEO of CloudMD, Karen Adams. So Karen, welcome. Also joining us is Sharif Habib, the CEO of Dialogue. And also you'll see on your screen is Brett Belchet. Hopefully I pronounced that correctly. He's the CEO of Maple. So before we start the chat, just a couple of housekeeping items. Just want to make sure that the attendees' microphones are all on mute and your cameras are turned off during the session. Please ensure your name appears on screen so we can properly address any questions you may have. Should you have a question, please use the hand feature, or at the same time, if you opt to use the chat function, we'll try and get to your question as soon as possible. Either option is available to you. And then finally, questions will be moderated by Jordan Simon, who is also handling any technical issues that we might have today, and hopefully not. So with that, we'll get started. So again, I welcome everyone to today's panel, and to jump into the questions right away. This is a question that I will ask all of you, and we'll go in alphabetical order, which is based on the company itself. So Karen, you can respond first. And the question is, just take a minute and a half, and just give the attendees a sense of, when you look at who the panel members are, and I'm sure you guys are all familiar with one another in some shape or form, just give a quick highlight of your own company and how your strategy differs from the other participants in today's panel. So Karen, please go ahead.
Sure, thanks, Nick. So CloudMD really is a diversified company that offers an ecosystem and a way to solve people's mental, physical health issues. We see really three distinct pillars for us. With regards to the US market, CloudMD leapt into the US market as early as 2020 with some unique technology assets where we have a patented technology, as well as a managed behavioral health services, mental health, and EAP, to really start to unlock one of the largest markets in the world. The second is a hybrid model. So we deliver health systems to payers, carriers, patients, and clients through a hybrid model that leverages our technology. While our philosophy may appear at the outset as digital first, we tend to define it internally as one of the most appropriate care for the needs and preferences of the individual, sometimes known as omni-channel care. So the last one, which I think is also important, is we have the largest provider ecosystem in Canada. So we currently service a combined ecosystem of 7,000 psychiatrists, 4,500 therapists and counselors, 4,000 psychologists, 22,000 family physicians, and 34,000 medical specialists, and 1,500 allied health professionals. So I think that network, or that provider network, helps us through every one of our product offerings, whether that's EAP, independent medicals, OC Health. And I think now we're using those provider networks to deliver more than one service, such as occupational health clinic, second opinion. So I think those, as we look at it, in a summary, are probably the three largest things we're proud of vis-a-vis CloudMD.
Okay, thank you. And Sharif, I turn it over to you.
Thanks, Megan. Hi, everyone. So we are an integrated health platform that is 100% focused on the B2B space. We started as a telemedicine company in 2016, and with time added several mental health programs and an EAP. And we've been very clear about our intentions to move upstream in the care continuum with a bigger focus on wellness and prevention. Our clients are organizations that have a vested interest in keeping their members healthy. So that could be an employer, an insurance carrier, a student organization, a financial institution, etc. We don't do any B2C, and we don't do any direct to patient, and we never build a public system for any of the services that we provide. And we're really not an Uber-like model. We strongly believe that driving health outcomes comes first through continuity of care. So the vast majority of our healthcare providers are, either full-time or part-time employees of Dialogue, with all the advantages that this creates, especially around consistency and quality. So that's Dialogue in a nutshell.
Thank you. And Brett, just to position Maple in the marketplace.
Yeah, so I think it's really important to understand that rather than being a healthcare provider that uses technology to help us deliver services, what Maple first and foremost is a technology platform that really allows us to reimagine how healthcare is delivered in the virtual space. And as a result, when we look at our company, we're fairly agnostic in terms of who the end customers are. And the customers that are using our platform can be direct to consumer, they can be B2B, they can be government and institutions. The nice thing about the business model that we have is that by operating more in the technology space and being more of a channel of delivery of healthcare, our margins and our business profile much more closely resemble what you'll typically see in the technology space versus what you'll see in the healthcare space. So we have gross margin profiles that trend closer towards 70%. In the long run, EBITDA positive margins, they closely approximate about 30% positive. So much more what you would see in the more typical tech-enabled SaaS platforms than what you would see in a typical healthcare platform.
Okay, great. So the next question is also geared for the three of you. And the question is, within the healthcare space, we're increasingly seeing patients that are looking for holistic solutions as opposed to fragmented offerings that are coming from different market participants. So what's your outlook on single platform providers that are out there? Do you believe that they will continue to exist? Do you think that they may cease to exist, or do you think that they're going to require partnerships to continue to exist? Or do you think that the healthcare space might undergo an accelerated M&A window here, if you will, where these single platform providers are looking for a dance partner? So we'll start again with Karen.
Great question, Nick, because there's so many of these platforms out there, it becomes confusing for buyers and investors to understand. I think CloudMD really offers synchronous services, meaning when somebody accesses our platform, they're not accessing for one issue. The thing we know about healthcare is it can be a comorbidity issue. I can have a physical issue, I can have a mental health issue. I'm not a singular focus. At the time, I might be experiencing symptoms of one particular thing that I'm focused on, but an effective platform is one that can service the whole person. We have had the most success in our programs when we're able to use assessment tools to set the person up understanding what the issue is, and then create treatment plans for all the issues that impact well-being. And our real focus right now is that we want to be the partner to individuals on their life journey. So we'll work with people in a prevention mode, we'll work with them on an intervention mode. I think that these offerings are only going to be sustainable if the platforms can provide a seamless user experience. That's going to be the number one issue. Comprehensive functionality, security and privacy is going to be huge for people as we go forward, and all to leverage the state-of-the-art technology using AI. So this may or may not accelerate M&A activities. I think there's going to be consolidation for sure. It's going to be very hard to be a standalone platform and convince any employer to buy 5 different platforms. It's just not going to be feasible. But I think the acquirees that acquire these platforms, they have to be a differentiated asset. There has to be something about this platform that does something different. And to be potentially acquired, there has to be diligence and discipline. I don't think the market is open anymore to these platforms that are in the startup, that don't have the privacy and security, the AI, and the ability to connect, because the amount of money spent to integrate these tech stacks is huge and cannot really is a drain on companies' profitability. So I think it's going to be a combination of consolidation and partnerships really to drive effectiveness in the marketplace.
Okay, great color, Sharif. Please weigh in on that.
Yeah, well, thanks, Nick. I mean, essentially, your question is our sales pitch, so I appreciate that. You're totally right. Patients are looking for holistic solutions, and the payers, in our case, organizations are also looking for that. The benefits from the member or the patient side are very clear. The having the amazing experience, the continuity of care, the one underlying data platform, not repeating your question or your issue to a dozen different people. These are really important for the patients. For the payers, the vastly simplified administration for the client, the reporting, the billing, the security, Karen touched on some of those. But for us, we think that the real differentiator is true integration. We think that some companies are acting like as an integrator of a collection of assets, and we don't believe in that strategy at all. We think that it has to be properly integrated and seamless, both for the member, the patient, and the payer. M&A is one tool in the toolbox, but it's not the only one. Whenever we come up, we need to add a new program to our IHP. There's a build by our partner analysis, and we've done all of the three. So M&A is just one tool, but as Karen said, like there is risks and challenges with M&A around integrations, around cultures, around technology stacks, around all these things. So we kind of have to be careful and diligent when we're looking at it.
Okay, and then Brett, your view from the private side?
Yeah, I would say, first of all, my view on this comes not only from running Maple, but I think also just from my background as a physician, which is what I did before we started this company. And what I will say is that in healthcare, it is critical for the multiple parts of your healthcare experience to work together in some fashion. There's very few patients that are interested in going to one place for primary care, another place for mental health care, and another place for other specialist care, and another place for allied health care, where none of those places speak to each other. That's what they have in the existing physical healthcare system already. And nobody's looking to recreate that and spend money to recreate that in the technologically enabled world. So it's critical that whatever solutions are provided by anybody in the market have something that you cannot get off the shelf in the physical healthcare system. Now, I would agree with Sharif. I think M&A is just one pathway towards achieving that. I think there's lots of ways to have a truly integrated experience in the virtual or technologically enabled world through integrations with partners or other mechanisms to bring in the very best skill sets for any given problem. And I think the one thing to be very clear about is there are many circumstances in which partnership would be actually better than M&A. And part of that is just that typically what we will see is many of the most innovative and leading solutions are ones that can stand on their own. So I would push back on the assumption that an incredibly top performing solution can't perform on its own. And many of those solutions you will only be able to access through partnership, and many of them cannot be purchased. So, I think that the analogy I would say is the department store analogy. You can get a little bit of everything in a department store, but you're not going to get the best of everything in a department store for the most part. And so really being able to partner with those boutique services that provide the very best of everything is one of the many very exciting strategies to create an integrated experience.
Okay, and I guess my next question, really picking up again on not so much the M&A theme, but looking at the competitive landscape. I mean, all three of you agree on the holistic model. So the question is, when you look at the competitive landscape, when you look at your current offerings, and with the holistic view in mind, are there pieces that you would like to see integrated into your offering today, either through partnership, through acquisition, through internal development? And it could be, practitioner pieces like chiropractors, hemopathy, just urgent care, nursing, whatever the case is. Are there pieces that you think you need to bring in-house in some shape or form to give you that rounded holistic view? And we'll go into reverse order. So we'll start with Brett here.
Well, I don't want to reveal all of our trade secrets. I will say that it's no secret to anybody who has tried to improve healthcare that the healthcare system is an okay system when you're actually visiting a healthcare practitioner, but where the healthcare system tends to fall down, and this is not only in the physical world, but also in the digital world, is everything that happens between your healthcare practitioner visits. So we all know that we have a visit, and then until our next visit, we're kind of on our own. So I think where we think there's a lot of opportunity to really make a difference is what are the sets of experiences that people can be greeted by before they see a practitioner, that clue them in as to when to see a practitioner, and then help to support them between the practitioner visits. So it's that holistic, ongoing element of care that I think is really sorely lacking across many, many offerings, both in the physical and the digital world. And that is something that I think is absolutely a priority for us to start working more on, both through acquisition and in-house building.
Okay. Sharif, your thoughts on missing pieces?
Yeah, I couldn't agree more with Brett. I mean, we've been very explicit and vocal about our desire to move more upstream in the continuum of care. Today I think our services address diagnosis and treatment really well, and through our Optima business, we do some rehab and disability management. But where we see a lot of interest from employers and insurance carriers is to get more involved in prevention. So we're really looking into the options and earlier in the spectrum, fitness, wellness, mindfulness, all that stuff. As Brett said, I mean, a healthy adult of working age, goes to the doctor once or a couple of times a year. But what about the other 360 days? And that's where we want to play a bigger part.
And Karen?
Yeah, I think the one thing we all agree on this call is that, we're trying to service an individual from the time they have a curious about a health issue all the way through to a serious health issue. And I think that where we see the value is building perhaps more focus on a build around things that are evolving concerns. I mean, we were able to pivot quickly around the pandemic. The issues were around COVID, around apprehension about being with people, and being able to pivot and provide the resources both as modules to engage people or to get people feeling like they're ready to engage in some sort of intervention, whether it's in a prevention mode or in an intervention mode, is where our product team is really focused on right now. And that's going to take all kinds of forms. That's going to take the forms of us building content where we feel it's highly valuable, leveraging partnerships, leveraging not-for-profits, leveraging M&A activity. I mean, for us, it's really going to be around what are all the issues, and then building that relationship. I think that's really important for us, is building that relationship with the user, whether they're an individual or in an organization, where we're the go-to people, where they come back when they're just curious. And I think that you have to continue to build out your content, build out your programs, whether it's chronic pain or women's fertility, whatever the content may be, to get away from this catch-all phrase and attract people where their issues truly are.
Okay. My next question comes with a little bit of a political twist or angle to it. And so you guys all saw obviously the recent alliance between the NDP and the Liberals. And I think to get the NDP on side, obviously we heard that there's going to be an emphasis on a national pharmacare and a dental care program. So the question is, what are your thoughts on having these universal programs along with healthcare that we have currently? And then do you guys think that this is going to drive a change in the telehealth industry in general? And does it offer an opportunity for you guys when it comes to maybe a new market opportunity? So we'll start the question with Sharif. In answering that, just give me your thoughts on whether, and I know that Doc has a pharma solution, or at least they're involved in the pharma space. Given what the NDP and Liberals are talking and proposing to do, not only do you see yourself going to dental care, and do you see yourself getting involved on the whole pharmaceutical market as well down the road?
Yeah, I mean, look, on this panel, we're probably the company that's kind of the least affected or the furthest away from those changes. No, we don't plan into getting into, dental care or pharma care. That being said, we understand that the insurance industry is supportive of pharma care. We believe that every Canadian should have access to the life-saving prescriptions and medicines they need. That, again, like we've seen the pitfalls and the disadvantage of a universal healthcare system when it comes to primary care. And I would hope that, the regulator, as they think about a universal pharmacare, don't kind of fall into the same pitfalls and we don't make it mediocre for everybody by making it free for everybody. So again, we're the least affected. So that's just my personal opinion. But I'll cede the floor to my colleagues who probably have more to say about this.
Okay, we'll turn it over to Brett just for his opinion.
Yeah, I think the devil is going to be in the details of how these plans are implemented. I would say pharmacare and dental care, absolutely, I would be supportive that those who cannot afford prescription drugs and cannot afford dental care should be covered. Nobody should go without either of these two things if they don't have the means to cover their own expenses. Providing universal pharmacare for everybody, even if they can afford to pay for their own drugs, and similarly with dental care, pay for their own dental care, has a number of risks. And we've seen that in other countries that have attempted this, where the quality of the medications that are available and the quality of access to dental care, for instance, tends to go down. And certainly, there are some heartbreaking stories in some other countries with national pharmacare schemes where you will hear stories of cancer patients that cannot get access to the best in market cancer therapy because it's just not part of the pharmacare program. So I do worry about some of the effects if this is broadly implemented. I think if it's implemented well, and it's implemented for those who would not otherwise have coverage, I think it's a very beneficial program to put in. It does open up some opportunities for virtual health players that work in the benefit space. And part of the reason why it opens up some opportunities is that when we think about where is the vast majority of benefit spend going on the part of corporate Canada, a very huge percentage of benefit spending is going towards dental and drugs. And so if that is something that goes off of the responsibility of corporations, they no longer have to pay a PMPM or PEPM for dental and for drugs, that does then start to ask the question is that spend eliminated on the part of companies, or do they start to spend on other services that they think can fill the gap to greater support their employees? So I think there is an opportunity for virtual health providers to fill some of that spend and take advantage of the budget that may be available. But again, a lot of this is going to really depend on how this is implemented and who is eligible.
Okay, and then Karen, as you weigh in, I guess your thoughts on, is the dental market an opportunity for CloudMD? And then on the pharmaceutical side, do you see a national program as being a catalyst for you guys, or possibly posing a threat, assuming that somebody else is able to take the lead there?
Yeah, so first on the dental, that currently isn't on our product roadmap at this point in time, but life always changes, right? So I'll say just not now. I think it's important though to put this in context. So first of all, a national pharmacare program has so many elements to it that it's going to be quite difficult. The whole value chain of the drug manufacturers, I mean, this is a very complicated thing to roll out. I think it's also important to recognize that the pharma part of our business is a very small percentage of our total revenue. We use the pharma as a, let's face it, it's a high utilization when people are accessing the platform that they're on the drugs. And our frame of reference and why the pharmaceutical companies even came into CloudMD was this concept that we could actually help people manage the drugs, make sure, especially in mental health, people can take up to 6 different drugs before they get on the right drug. So this concept of being able to do adherence, compliance, how's it working for you, what's working, what's not working, became a really critical component. And let's not lose sight of the fact that the private payers, which is mostly employers, spend more than $13 billion annually on prescription drugs, and 23 million people putting through prescriptions on an annual basis. That's a huge amount of money. That's a huge amount of drugs going through the system. Rare drugs consume 10% of the spending at a growing rate of over 30%. So we see our role in doing patient support programs where we're making sure that the patient's on the right drug, they're getting the drug, they're complying, what are the coping, and what are the reimbursement efforts that are available currently to help. When the National Pharmacare comes in place, I think we're going to have to look at the legislation and see how they're done. It's going to be very hard to take the private payers, and Quebec's already said they would opt out. So how are they going to get the provinces aligned to doing this, right? So I think before we're set up to help, whether it is paid for by the government or it's paid for by the insurers, our goal is really around supporting the individual. So I think our impact is not going to be huge because that's not really the role we perform.
Okay. So it sounds like it's a good political discussion, but the devil's in the details. And for that, we'll all have to stay tuned. Next question, and we'll start with CloudMD and dialogue on this, but obviously since September of last year, we've seen multiples contract in the entire technology space, not just within telehealth, but we've also seen a little bit of a change in investor sentiment from revenue growth, primarily the focus, to more and more of a profitability or nice balance in the model. So given that landscape of contracting models and a focus more on profitability, has that in any way changed your business outlook, especially as I think both companies have some form of North American expansion as part of the strategy and European expansion aspirations. So given this context, is it changing your capital allocation and how you plan on executing? So that's the nature of the question, and we'll start with Cherif.
Yeah, look, we don't control the macro environment and how the market is behaving. We don't control, what's trendy, whether it's growth or profitability. What we can control is our business plan. We have, I think, from the feedback we've received, I think investors and shareholders have been very pleased that we've executed exactly on what we said we would do. We've been public now for just a few days over a year. So we've had a few quarters and where we've done exactly what we said we would do. So that's what we're really focused on. And for us, the multiples, the share price only makes a difference if you're trading. But all of us as a management are there for the long term. Our major investors and shareholders are there for the long term. So the number on the ticker is more of a theoretical concept. I think it does create opportunities when we're looking at M&A. Obviously, targets in the market, public targets are attractive. Private targets that have a more limited capital raising opportunities or multiples that they maybe had a year ago also become more attractive. So I think net, because we don't need to raise money anytime soon, because we're not transacting our shares anytime in the short term, because we have all this money on our balance sheet, we're not too fussed with the outside environment right now.
No, it's a good response, and it sounds like it's manage the business, not manage the share price, which I would certainly agree with. Karen, your thoughts on that?
Yeah, so I think I share a lot of Cherif's comments. I think you have to build a business plan that builds shareholder and client value. And if you're executing on your business plan, I will say CloudMD has had a focus since January of last year on the assets we bought to become EBITDA positive and cash flow positive. It is built in our culture. It transforms itself through the organization. I think it's just a discipline that we have decided early on last year to build into our business. We're expecting to be, we've shared with the market, we're expecting to be EBITDA positive by Q4. We did have a minor setback with MindBeacon because of the financial, but as we disclosed last week, our efforts in our PMO office has been focused on taking costs out. I have to say publicly, I'm very proud of the team for taking those costs out and being prudent. But at the same time, we took them out with a lens on creating client value. So we did not strain the company with a major cost setback. It was more about how do we deliver value by integrating people and process. We'd already integrated the products. We just hadn't taken some of the excess business leaders out at the top, where we now are investing in the front line. I think the other thing I want to say is we've been very diligent when it comes to our capital allocation strategy. We're focused really, I think, Sharif, you said this, making investments that are accretive to shareholders. And it's not a time to not be doing M&A, it's a time to be doing it, properly and thinking about how we allocate our capital in the company. We're driving our strategy around being a leading provider. Innovation and product development is key focus for us. So we're investing in technology, number one, expanding capabilities, geographic expansion. How do we become a North American provider in everything we do? And we really have the capital structure right now to support this continued growth and expansion while using our operations to generate positive cash flow to sustain the business. And we too have a large cash balance, cash available to us. We're not cash strapped, and we have debt facilities available to us. So we feel we're in a very strong position of strength, and we just can't manage the share price on a daily basis. If we could do that, we probably wouldn't be doing this for a living. So, it becomes difficult, but I think shareholders like the eye on the ball on profitability and the path to profitability, but recognizing there still has to be an investment in the business.
Okay. And then Brett, as I ask you to weigh in, I'm going to throw in a little bit of a twist to that question. Obviously, it's public knowledge that you are looking at a potential IPO at some point. That was the case in 2021. Maybe just given your observations in the marketplace with multiples, et cetera, how do the current environment, how's that impacting not only your IPO or public company aspirations or journey, but maybe if you don't get to that level, is it impacting your capital allocation in the short term to be able to execute on any sort of M&A plans you might have?
Mm-hmm. We look at IPO purely as an exercise in raising capital. IPO is not an exit strategy, and I think that's very clear from any company that has gone down that path. And IPO was attractive. If we go back in time a year and a half ago, it was attractive because it had the lowest cost of capital. It had multiples that couldn't be met through private capital raises. And so we obviously owed it to ourselves to explore that as a source of capital. If we look at the world as it is today, clearly that's not the case anymore. Multiples in the public markets have contracted. The IPO market is largely frozen. The cost of capital, were we to somehow be able to have a successful IPO right now, would very likely not be any better than what we could achieve through a private capital raise. So when we look at our choices right now, when we do need to raise capital, and we don't need to raise capital for operations, any capital that we would raise would specifically be dedicated towards an M&A strategy. When we look at raising capital for us, I think we're predominantly at this point leaning towards private sources of capital. And to be frank, those sources right now are quite plentiful, and there are many, many options. So I think we lean right now in that direction. All that being said, I think this is a bit of a swinging pendulum. I think we're obviously in a time of difficulty in the IPO market and in the public markets in general for tech. I don't think we're going to stay there forever. And when that pendulum swings the other way, we would certainly have a renewed interest in exploring the public markets again. And then the final thing I would say is just around M&A. I think most people would agree that executing on an M&A strategy is probably a little bit easier when you have public market currency in a healthy public market environment than it is as a private company. So certainly to enable our future strategy of M&A, that may be a preferable direction to go in.
Okay, appreciate that response. Next question will direct it towards Dialogue and CloudMD. So on March 23rd of this year, we saw obviously the behemoth in the technology space known as Amazon, but also a sizable e-commerce player, of course. But we saw them partner with telemedicine provider Teladoc, and they announced a new landmark initiative where they're going to be providing virtual care through the Amazon Alexa devices. So I'm curious on your thoughts when it comes to this partnership, and if you think it supports and validates and helps drive virtual care momentum. And do you think does it pose a challenge for your businesses, not just here in Canada, but aspirations down in the US, just given the size, the market cap size of these two players? So we'll start with Sharif.
Yeah, just a small anecdote. When Teladoc a few years ago announced that they were coming to Canada, that was probably like the scariest news that I had read back in the time. Like, we were very small, and it was kind of a very scary headline. And I'm very happy to report that a few years later, like, we haven't lost a single account to Teladoc. Like, they've very honestly not made a dent in our business, and I'm sure it's the same for the others on the panel. Like, they're really a non-entity here, and I think it really shows the difficulty that American healthcare companies have here. It's such a different system. It's a different construct. It's a different world. So the short answer is no. I'm not worried. Obviously, Amazon is an amazing company, but I think they probably have, bigger fish to fry than the Canadian healthcare market. So I don't see it as a short-term risk at all.
What about if you have any plans to expand down into the US? Do you think it's more of a attention grabber than it is, the devil's in the execution in this case here? Do you think that it all sounds great on paper, but you're maybe a little bit concerned that the two parties don't necessarily execute, and therefore pose a threat?
I think it's a headline grabber on the same level as, Amazon drone deliveries and Amazon phones and a few other Amazon things that didn't work. Again, Amazon is an amazing company. Their biggest fan, their biggest client, they're a shareholder. So it's an amazing company, but I don't think, I don't think an Alexa powered Teladoc televisit makes any sense. I also, like, we've been very clear that we're not, really planning to go into the US in primary care. We think there are other opportunities in the US healthcare market that are interesting. So if you're not thinking of the US market in primary care, then this announcement is not really relevant.
Okay. And Karen, your thoughts?
Yeah, so, first of all, I think it's interesting and a testament that we're going in the right direction when a company like Amazon decides to reinforce an integrated platform, regardless of how they define it. Clearly, we're making an impact in this continuity of care. For us, it's twofold. I think, we're really about preferences. So we're about being able to meet people where they are. So for some people, they want virtual care. Some people, they still want to go back to the old brick and mortar. Some people want to just put their toe in the water and just understand a little bit before they engage in some sort of a health intervention. So I think having that human ability and that flexibility to be able to offer a continuum of care is really going to still be how people want to get care. Also, when you look in the United States, because I think looking in the States is probably where this is most relevant. I think we're light years away here in Canada from Amazon being focused on our market for a whole bunch of reasons. But in the US, it's a large market, like it's a huge market. And I think that in the US, our experience so far as we've launched our mental health program is that you've got a very complicated system of how people get reimbursed in the US. There's also a big factor around people not having in lots of areas either the financial wherewithal to have tools that allow them to connect to virtual care. And lastly, there's a trend in the US, which is that they really are looking for this navigation piece. They're really looking, it's so convoluted down there around what type of providers, who pays for what. You can have in an organization 72 HMOs in one specific state. So we're seeing the value proposition as really being that conduit between, the understanding where you're at and then connecting you to the resources. We won't own the provider network in the US, we'll do the conduit. And I think Amazon is not understanding that. They are a distributor. right? They are a logistics distributor of product. And so I think it's interesting. I'm not worried about them being a contender for the exact type of services. If we were getting into commoditization, I'd be worried, but that's not. It's a high touch product that we're promoting in the marketplace.
Okay. That's appreciate that color. Brett, for you, the entirely different question. Obviously, you're a private company, but you have done some transactions with public companies that have given you exposure to institutional investors, or giving you headlines. So my question is, we've seen that there's an investment from Loblaw. I think they put $75 million into your business, and we already know that Loblaw years ago acquired QHR and Medio. So can you help us understand, maybe differentiate yourself as to how Maple and QHR/Medio coexist? In other words, what are you bringing to the platform that drove Loblaw's interest to make that investment?
So what QHR and Medio is a very different type of platform, very different value proposition than what Maple offers. So QHR in and of itself is an electronic medical record provider. So what that means is that they provide the software that is used by thousands of doctors' offices across the country, so that when they see the patients, they can chart on their patients' records, they can track things like laboratory results, they can manage their practice. So that is a big industry in and of itself, and mostly it's an industry that's independent of virtual care. Now, Medio is a virtual care tool that was developed, I think it was around 2013 or 2012. So a much older generation of virtual care tool, very simplistic. It essentially allowed one doctor to do a video call with one of their existing patients. And Medio was tacked onto the QHR platform as a mechanism for doctors who used QHR to run their practice, as a mechanism to allow those doctors to have a video visit with patients that were part of their practice. So it is a solution that empowers one-to-many telemedicine only through video. And when I say one-to-many, it's a restricted many because it's only the many patients that are part of that doctor's practice. So if we look at what Maple does, Maple, we do have a form of EMR within our platform because the providers have to be able to chart, and they have to be able to administer some of the back-end tasks of providing a healthcare consultation. But we are not a solution that powers a physical doctor's office. That's not what we do. Our solution, when we look at what it provides virtual care, it is a many-to-many solution, meaning it allows many doctors and many types of healthcare providers, as well as doctors. So there are many paramedical providers and specialists using our platform to take care of many patients. And that is a completely different construct. The other element that's really important to note is the Medio platform, as I said, was a very early take on virtual care, very simple, just video. It's almost like a very, very basic version of Zoom. Our version of virtual care is something very, very different, developed many years later using much newer technologies, much more comprehensive, lots more functionality, lots more modalities of communication, lots more back office support built into it to actually support the virtual care, including virtual care consultation, including things like record keeping, digital prescriptions, digital laboratory requisitions, specialist referral functionality, all of that built right into the video construct or the secure messaging contract, however the consultation is occurring. So very, very different solutions. But I think if there's the question of what is it that made Loblaw interested in us, versus saying, let's continue to work with Medio. Loblaw as a company has one of the largest customer bases in all of Canada. So they have 16 million loyal Optimum members that shop at Shoppers Drug Mart, Loblaw, and many of their other properties across the country. And Shoppers Drug Mart and Loblaw wanted to have a solution that could connect those 16 million people to a system of many, many practitioners on the other side. Medio could not have powered that solution. It was always built for one provider to treat one practice of patients. So a system like ours, which was built from the ground up to allow many people to connect to many providers, was what was infrastructurally necessary to power the future that Shoppers Drug Mart and Loblaw wanted to make real.
Gotcha. So you guys power the network effect, the way I like to think of it. And I've always thought, when I first saw the Medio announcement, I always thought of it as FaceTime for doctors, but that's
I think that's not too far from the truth.
so my next question, this is for Karen. On March 22nd, so just late last month, we saw that Ontario doctors voted on new contract to put together a framework for virtual care options. But there was also a group of cardiologists that wants members to vote against what this bill would allow as far as telephone services. So a little bit of resistance, if you will, when it comes to expanding virtual care, specifically here in Ontario. So do you think that this, maybe from what you're hearing, do you think that this resistance could impact telehealth services in the entire B2C space? And if so, does that maybe shift your attention to B2B? Just if you're aware of that votes, your thoughts on that, and what could be the outcome from it?
Yeah, so, we have had in Ontario, I would say, a lagging perspective on telehealth. It basically gained momentum as a byproduct of the paramedical spend. With regards to our services, though, because we don't provide primary care services like that on the back end, so we are a referral agent. So we are dependent on the people we refer to really bear the effects of what this is going to happen. So we don't really dictate whether somebody needs telehealth. If we refer to a cardiologist or we refer to a orthopedic surgeon, they're really going to deliver care in the way that they, through their colleges, through the system. It doesn't impact our business at all. The referral will still happen. People will have to go and see the specialist in the way that they have designed their treatment around. So as far as our business, it doesn't really affect our business at all. However, as you can appreciate, with such a large network of providers, it is a topic of conversation that happens because we are so connected to our network. It is something that they talk about. I think it's so early really to predict how the telehealth services are going to roll out in Ontario. I think that the specialist care and access to cardiologists is really, for us, it's a referral mechanism, and that's it. So, it doesn't really have a big impact on our revenue per se. It has more of an impact on how jovial and how well-feeling our network provider is that we work with.
Okay. Next question is for Brett and also Sharif. I just want you to weigh in on this. So, Brett, we saw Maple, you guys acquired a company called Wello recently. I think it was January this year, and they're a virtual healthcare brand. So just maybe help us understand the strategic rationale for that acquisition. And then Sharif, your thoughts on how, in the context of this particular transaction and maybe others that are similar, is the competitive landscape in Canada changing? Do you feel that there's people out there that are maybe encroaching on your business, and do you see that Wello transaction as being possibly one of those? So Brett, if you could start us off.
Yeah, so for us, the strategic rationale is quite straightforward. For us, our central thesis around M&A is that we are interested in M&A where we can increase either the number of clients, individual patients, or healthcare providers that are on our platform. And where we believe that by moving those groups over to our platform, we can achieve clear-cut synergies. And for us, there are, when we look around the world, numerous opportunities to achieve that. And part of that is just due to when we look at our margin profile for operating a virtual care business versus the margin profiles that we've seen of some of the opportunities that are out there for us to acquire. So when we look at the Wello acquisition, for us, it was a company operating in a very similar space to us, providing virtual healthcare services in the B2B space with a good team of healthcare providers that were providing very high quality services. However, when we looked at the operating model, the economics were vastly inferior to our own. So much inferior gross margin, EBITDA negative to a fairly significant degree. So When we did the analysis of that, it was a clear fit for our strategy. We could add on a lot of top line revenue, a lot of blue chip clients, and a lot of healthcare providers, and transform their operating economics to our operating economics. And this has been a dramatically successful acquisition for us. So we were able to fully close out the acquisition in a matter of months. And since the acquisition is closed, we've been able to more than quadruple the gross margin on the revenue that Wello was bringing in. And we've also been able to take that cash burning business and turn it into a quite significantly profitable business. So it's actually generating cash now for our bottom line to a very significant degree. So for us, it's been an absolute win and a clear, I think, example of why our business is a very natural acquirer in the space, and potentially not only a natural acquirer in Canada, but I think also a natural acquirer potentially in international markets as well.
Yeah, and Sharif, if you want to just weigh in there and maybe talk a little bit about the competitive landscape. If obviously you heard virtual care, you heard B2B, so just does this change the competitive landscape for you at all?
This particular transaction does not. I mean, you know, Brett and I, as much as we're competitors, we're also friends, and we have a lot of respect for each other. So I think you know, Wello was a small asset, so it's not, you know, it's not. I don't think it's changing the competitive landscape in any way. That being said, like, I think that this industry is ripe for consolidation. I think there's only, you know, so many players you can have in one industry competing, you know, for the same dollar. So I think I think there's a bunch of subscale assets like Wello that will have to, you know, either find a home or change their strategy. So I think it's just a natural part of the evolution of the industry, and I think it just means that the industry is maturing and is finding a footing, and people are understanding the long-term economics. Because when you start a business, it is easy to kind of have, you know, be in a subscale situation, burn a bunch of money, have low prices, because you don't know the long-term implications of some of these decisions. And I think this is an industry that probably started in 2015, 2016. Like, we all kind of started around like within 18 months of each other. And now we're kind of like getting to the teenage years of this industry. So this consolidation is going to be inevitable. And I think that, you know, Maple and us and a couple of other serious players will take different corners of the market depending on our different, you know, value propositions. And I think there's just a kind of a healthy symptom of the marketing of the market maturing.
Okay, and last question for the day. It's directed towards Dialogue and CloudMD. So just to frame it, in the case of Dialogue, your strategy is catered towards the enterprise and providing employees with a comprehensive virtual service. In the case of CloudMD, your solution set is also geared towards the enterprise and the employee market, but your twist is you're also focused on the, you also have an omni-channel presence. So maybe discuss the merits of your specific strategies, considering the fact that there is an overlap in the patient base. Obviously, you know, that patient works for a company. At the same time, that same patient is going to need some form of care on the weekends. So you're going after the same patient base in some regards. And then also how you are looking to position yourself, especially on the enterprise side, in the mental health space when it comes to government contracts is one thing that I'll throw out there. And then, you know, here in Ontario, we saw recently the NDP are saying, hey, if we win the election, we'll put a greater push on mental health in Ontario if they're able to win the June election. So obviously, it sounds like some greater prospects for government contracts here in Ontario. So if you guys could just, you know, weigh in with your thoughts on all that, and we'll start with Karen.
Okay, so like, you know, for me, CloudMD's purpose is really providing the personalized and connected delivery for better health outcomes. When I think about it, though, we deal with every sector. and every size of employer. And we also deal with individuals who have paramedical spend. So we actually don't care where you come from. It's more for us who pays. I think the biggest thing, and I just want to hone in on mental health for a minute, we haven't got it right. And if we think we've got it right, we have not. The wait times in hospitals, Ontario Shores has over 4,000 people waiting for mental health care. So we don't have it right. And I think the biggest part for us is a recognition that disability claims, short-term disability claims, over 30% of short-term disability claims are related to mental health. We have casual absenteeism. We have people showing up at work with productivity issues. Mental health has in and of itself, a huge opportunity to have an impact done correctly. And when I say done correctly means understand what the assessment is, understand what the right treatment is for you, whether it's ICBT in person. Maybe you just want to get a little information you're not ready to engage yet, and you need that nudge. The constant reinforcement for adherence and compliance, what's going well, what isn't, and then progressive measurement to say, how am I really doing to give myself this return to normal? And unfortunately, up until, and I've been doing this for a really long time, up until the solution we put together at CloudMD, people didn't have that reassurance that when the employer hands somebody off to us, they have the confidence that we're going to manage the mental health risk of the individual. And I think mental health is more than just mental health. It encompasses all of the physical, all of the social determinants. So really bringing that into the care plans, I think, is a big deal. The last thing, you brought something up really important about the public sector. The public sector is the government contracts that allow for the service paid for by the governments, but it's also, don't forget, there are also lots of other public agencies like the wait times in the hospitals. And the hospitals are now taking a proactive approach to saying, how are we going to support people with these long wait times, and starting to use the private system to help support these by using public dollars through the transfer system. I think it doesn't matter which government is going to come into play. The federal government has transfer payments for mental health through Carolyn Bennett's office. The Ontario government has made a statement by providing mental health. I think it would look very silly saying we're out of COVID, so we're not going to support people's mental health. COVID did not create mental health. Mental health was here before. So I think for us, the public sector is an important sector because I think it's a sector where we can use tax dollars wisely. And I think the last thing I'll say is, it really gives us an opportunity to advocate and evaluate the impact of our services.
Okay, and Sharif, you get the last word in. Go ahead.
Yeah, thanks, Nick. I mean, look, what do we know for a fact is that the public sector is very stretched on healthcare spend, and I don't think there's much more to go. What we absolutely love about our model is that we're introducing new funding in the system. So as we've said many times, like, we don't charge a single dollar to the public healthcare system. These are employers and insurance carriers that are stepping in and adding new funding into the system, which we think is an amazing thing for the Canadian healthcare system. The problem with government contracts is that they're often short-term, often at the mercy of political wins. It is a risky revenue stream. So we've been, we're open-minded. I mean, we look at every RFP that comes out with a critical lens, and so far we haven't seen anything that really made sense for us. But we're not closing that door if in the future something comes out that is aligned with our vision and our, the way we want to provide care and our unit economic targets, then we'll absolutely look into it. But just to reiterate, like, we love the fact that our B2B model puts new money in the system. It's really a win-win, and we stay away from kind of all the controversial aspects of the public provision of care.
Great. Okay, and with that, it's going to bring an end to our panel discussion today. I do want to thank Karen, Brett, and Sharif for your insightful color, and I think I certainly found it very informative, and I certainly hope that all our attendees found it that way as well. So I thank our panelists, and I also want to thank all of our attendees. Thank you so much. And just as a reminder, our next presentation will begin at 2:05, and it will be with the Chavo. So thanks again, everybody.
Thanks, everyone. Bye-bye.
Thank you.